you look at the ASX 200, Shanghai, all of them are trading in the positive territory.
Third time he's going to swear, he's going to take the oath as the Chief Minister of Maharashtra.
Important support comes in at about 24,281.
We can make our decisions without them being reversed other than by Congress.
Vodafone PLC is going to sell a 3% stake in Indus Tower via block deal.
The price has been revised for the base variant and it's just to reach the larger audience.
71 points higher, 24,540.
Novartis has, which is an innovator, has lost an appeal against MSN in the US District Court.
Our view is that the RBI should cut tomorrow.
Nifty is now trading below the 24,500 mark.
100,000 was a level that the markets have been anticipated for almost a month, and we finally have seen that come in.
7 out of 10 economists do not expect the lower than expected GDP print to accelerate the rate cut cycle.
300-point recovery on the Nifty from the lows. Banking index, IT, all of them contributing as well.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's the day so far, and what a terrific, terrific day it has turned out to be. Just an amazing one-way ride from mid-afternoon, exactly 12 o'clock. It's almost as if, you had those boosters put in and vertical takeoff, 330 points. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues, Surabhi, Rima here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon, folks. Santa is definitely in town.
Absolutely, Santa's in town, and how, right? And we're just getting started with regard to this series. In December 2023, that series, we were up close to 8%. So is Santa going to be doing ho-ho-ho all the way and even better than 2023? Let's see if, that's going to play out. But today has been one of the best days we've seen in terms of trading action from a bullish perspective in the last many sessions. And we pointed this out in the morning. There's a possibility that tech index will outperform. That index is up close to around 2%. So last couple of sessions with the banking names, today the tech said, let me take center stage.
Tech is, the IT index is at 2%, is the top performing, top gainer across sectoral indices. So doing very, very well.
High on the tech index.
Just a extra push for the IT index. But, but the takeoff itself is quite remarkable because, the takeoff from 12 o'clock, there you go, exactly at 12. And we never looked back. So there was that sharp, almost 200-point bump. Then there was, trading for a while for the next 1.5 hours or so, and then another move up. So from 12 noon, Nifty is up 400 points. That is how sharp this has been. Now we are, by the way, at 24,825. My God, 24,815. So we've taken out the 50% retracement of the fall. I think as I was sort of putting those numbers down, we were just around there at about 24,770. Actually, we were at 24,770, which is the 50% retracement of the fall from the all-time high on the 29th of September to the recent lows in November. And that is 24,770. And we've taken that out now. We're trading above it as we sort of get into the thick of the last 1 hour of trade or so. Banks, of course, are continuing to do very well, 0.8% there. So the gap between where the Nifty Bank is and the all-time high for the Nifty Bank, it's about 1%, 1.25%, that's it. And you'd be at that 54, I think 440 or so was the all-time high for the Nifty Bank. So not very far away, not 0.8, 1%. So actually, in the last 10 minutes, there has been further acceleration which has happened. And of course, as we said, the IT index, 2% gains, looking very, very smart. 2.33% gains on the Nifty IT index. Rima.
82,000 and counting on the sensex now as it's moved up 1,250 points. So 82,000 level has been scaled today. The Nifty's added on close to about 350 points. Mid-caps, though, compared to the frontline action, has been a little relatively softer. So the mid-cap index is only up close to about 0.5%, which is why the advanced decline ratio stands at about 1,350 stocks advancing for 1,050 stocks declining. So on a day when you have a 1,200-point Sensex rally, you would have expected the gap between the winners and losers to be a lot more wider. but that's not the case. The small cap index continues with its up move. The Nifty small cap index is up nearly 1%. IT is leading charge. As we said, the Nifty IT index has hit a fresh record high. And in the broader markets, you have names like BSC, CDSL. BSC is at a lifetime high, 11-12% gain on that. CDSL too, fresh 52-week high with a 7% up move.
Yeah, I mean, big moves in a lot of these capital market plays. A lot of other names like Swiggy, and we'll talk about these stocks as we go forward. But I'm looking at global screens as well. And actually, it's full risk on. If you're looking at Europe right now, most of the markets are up between 0.5% to about 1%. The Bitcoin anyway staged that big, grand move of 100,000, taking out that level. And look at the French market. That's where there's been political unrest with the Prime Minister being ousted. But the market's all right. I mean, it opened negative, it's turned positive. So things are chugging along quite nicely. By the way, while we track a lot of the Vodafone news here in India, the big international headline is Vodafone's merger. And it's a $19 billion merger, by the way, with Hutchison 3 UK. And this will create the largest mobile operator in the country, in UK itself. So some pretty big business strides going on in, in the home market for Vodafone as well, so to speak. So anyway, those are, some of the major news points. Coming back to the market here, a lot of today's gainers include sort of newsmakers, for instance, in IGL, where there's a bonus issue that's coming in. A couple of other names like Triveni Engineering. Granules is recovering. Remember, Granules was the casualty in the earlier part of this week because of their plant in Hyderabad. But there's, the company then clarified. The clarification came in yesterday, but it seems now the market's in a mood to kind of move on. And the dips are being bought in Granules. So lots of names on the radar. November auto sales coming in from the UK for JLR, Jaguar and Land Rover. A slight dip over there. Plenty to keep us busy in this last hour, Nigel.
Well, that's right. Surabhi, if you recall on Granules, I made this point yesterday, right? The shorts had piled up. The negative news came 2 sessions ago, and it went into the F&O ban just, in the last 45 minutes of trade. And since it was in the F&O ban, all those short positions could have got stumped out, which in fact is the case that's happening today. So it's recouping some of those losses that we saw in the previous trading session. That technical factor of it going in the ban, I think that's played out. A few more stocks that are moving around. IMFA, the ferrochrome maker, we have been pointing this out, that chrome ore prices have been moving up, which could help it out. But I'm looking at ferrochrome prices, they actually haven't moved up that much. So it appears now some part of the street is, realizing maybe value, maybe the shortage of chrome ore, and that's why that stock has been bid up. In fact, in the last 3-4 trading sessions, it's moved up on very, very strong volume. So just keep an eye out on that one. The other one we spoke about was Graphite India. HEG, largely taking place. I think 10% equity has changed hands as of now. We'll have to find out who are the parties. But Graphite India is going according to the fundamental news that maybe that large move that we saw in the last few sessions isn't really warranted. So that's why that's down close to around 7%. Let's get in Mitesh into the conversation. Mitesh, what a rocking rally we have seen. We have pulled back quite a lot of the losses that we saw earlier. And who would have thought? We're on the verge of going to around 25,000 odd. What's your take? If you had a long positions, what would be the trailing stop loss?
Yeah. So, couple of things here, Nigel. One, I think, today morning I had spoken about 24,350 coming into play, and there was this big sell-off which happened for about half an hour. And, but we didn't get an hourly close below 24,350. So I think the next target on the upside was 24,750, 800. I didn't expect 24,800 to be taken out so easily. But now that the market has done that, I think good chance that we are looking at 25,000 and in a good case scenario, 25,150 as well. So stay positive. Use declines to buy into, and on an hourly chart, just place your 20-day average. As long as you're not getting a closing below that, buy. In case you get a pullback to that average, again, buy with a suitable stop loss. That's the way to approach the index. The good thing is that the Bank Nifty, the Bank Nifty also has cleared an important level. There was a big gap down on the 30th of September, which had started the decline and the correction. That has been captured. Now what remains is the all-time highs of 54,375 on a closing basis and 54,460 on a intraday basis. So 54,375, 54,450 should be your zone target area, which is where you would want to take profits on the Bank Nifty.
Okay, thank you very much for that. Deven Choksi is now with us on the show. Deven, it's a buyer's paradise today. Everything is up. So have you been purchasing in the markets over the last couple of days, or you think it's now getting a bit excessive?
Yeah, good afternoon, Rima.
Well, I guess I think for portfolio investors, I think it's a happy time that you see your values going up because of the market actions. Nothing fundamentally has changed that I think it warrants buying at regular speed. In the contrary, I think in the fall, probably we got the opportunity to buy into some of the good quality names in the portfolio. So we still continue to hold on to them. In my viewpoint, I think this rally is driven more by the momentum at this point of time, largely coming in because of the additional fund flows which are coming into the market from the FPI side, and they're buying into the heavyweights. So as a result of it, the reflection comes directly onto index, and the consequent action thereafter would be on the short covering as well. So I think it is compounding at this point of time. Maybe I think technically the Nifty is supposed to I think score 24,750, which it has already done. It is close about trading above that level. I think one could possibly see a possibility of 25,200 once again re-entered into the technical point of view since the momentum is strong. But otherwise, fundamental remains as strong as they were before, and nothing changes as far as we are concerned in the portfolio.
Okay, so Deven is technically looking at 25,250, and even Mitesh spoke about perhaps the market's heading to 25,150. Mitesh, what would your stock calls be?
Yeah. On the stock side, I'll have a couple of buy calls. Tata Power, I would want to see the stock get past 431, 432. So it's trading at about 429.5, 30. Above that, buy with a stop at 425. Look for a target of 450 to begin with. That's another stock which is just giving signs of reversal. And Tata Steel is the other one, which I would recommend buying with a stop at about 145 or just maybe 10% below that, and a target of 154 on the upside.
Okay, all right, Mitesh, got that. Thank you very much for that. We have Deven Choksi joining in. Deven, hi, great to have you on the show as always. We want to start with this whole big surge that's happening on some of the market-related stocks once again today, right? There's BSE, there's Angel One, a lot of brokers, a lot of capital market infrastructure-related pieces. They're all going up. I'm not sure if there's any fresh news or trigger. And also give us your sense. I mean, there was a note from one of the brokerages today, local brokerages, talking about how options premium turnover is going up for an exchange like BSE. I don't know if your teams have noticed something like this or not. But what's new? Any new trigger for these stocks?
Yeah, Sylvie, good afternoon. Well, maybe on one side, I think the option markets, I think the new additional entry of 43 stocks for the BSE, I think could probably lead to the volume numbers. But more importantly, BSE is holding about 15% stake in CDSL, and CDSL prices have gone up. So from the value perspective, if you look at it, it's close to around 6,000 crores worth of value of CDSL that is held in the books of BSE, which is about 68,000 crore kind of a market cap. So from that perspective, I think the market is a bit little excited at this point of time because I think that value is going up. And generally, BSE would probably, I think, monetize the stake at some point of time further, I think having monetized a significant amount of it already. So to a greater extent, I think that is one level of, I think, understanding that we carry. That's why I think the traders have entered into, and probably BSE stock went in for a circuit for a while, and I think trading at a higher levels currently.
Indeed, big move is what we're seeing on BSE on very, very large volumes. But let's turn our attention to the quick commerce space then. Jefferies, they have written a note on aggressive discounting strategy in this space. Manglam joins us to fill us in with more details. Manglam?
Well, interesting note at an interesting time, especially because the big moves that we're seeing on both Zomato as well as Swiggy. What's happened is that Jefferies, they created a little basket of products that, all of us would use, something that comprises of personal care, F&B, home care, dairy, etc. The MRP value of that basket was close to around 11,500. They took all these products and compared it across all the other, quick commerce offers that are there, and they saw the discounting, and that was startling. The facts that it threw up. The average discounting on quick commerce is 14%, with personal care having 26% discount and dairy products having about 8%. Now, if you look at across platforms, the most aggressive is the most recent entrant, Flipkart Minutes, with 22%. DMart Ready itself is 21%. Then you have, Blinkit at 15%. But Zepto's Super Saver actually makes the discount at around 26% itself. So to all of this, Jefferies says that because there is so much aggression by the current players, there might be, a place where all the other existing players, the likes of Blinkit and Instamart, will have to respond to this aggression, and that may pose a risk to consensus estimates on profitability, not only on other listed QCOM players, but also the modern trade players as well. We've seen DMart call out the quick commerce impact, and with DMart ready prices now being comparable to Flipkart Minutes or Zepto with Super Saver, the street is worried about it spilling over to modern trade as well as the mom and pop stores that are there as well. And overall, this will create a fair amount of pressure to shorten delivery times across all product categories and across e-commerce platforms too.
Okay, all right.
Jeff. Yeah, no.
Yeah, I think Surbhi, you want to make a point. Please go ahead.
No, I was just saying that, you remember a conversation with Mr. Majeti just, I think it was yesterday, right? We asked him this question, point blank question, saying Amazon's coming in, what happens to the platform fee and other charges? I don't think, there were any clear answers. He just said that we're prepared for competition. We've seen competition in the past, and the buyer will ultimately vote with his or her thumb. But I guess, as Mangalam is pointing out, Jeffries is definitely penciling in some of those concerns. Nigel.
Well, that's right. Let's get in, a view then on this space. Deven, what is your view? There was a lot of attention that's coming in there, but how does this discounting and competitive intensity going up fit into your space? What do you like from here?
Well, on one side, the fundamental story remains intact. I don't see too much of change. Do agree that I think the competition is going to have its own say. And I think one of the larger challenge would come from JioMart, I think, who is basically having tie-ups at the back end with all the Kirana merchants. So they could possibly enter into it with a force. And I think who knows how exactly the pricing would change, or the platform access fee would change, or take charges would change. One doesn't know that part of it as well. What I am concerned about is that between these two companies, listed companies, Zomato as well as Swiggy, I think they assume the total market capitalization of somewhere around close to 3.84 lakh crores. And on which I think the Zomato is making some profit, Swiggy is yet to make profit. We are paying significantly large amount of premium to these assets. I think even though I buy that point that I think it's a fantastic consumer tech and it has a game plan in place, but still all said and done, I think everything is in price. At this point of time, I believe that Zomato's momentum is largely also because of the fact that getting included into the index, sensex, and that's where probably I believe that I think the larger part of the momentum is chasing this particular stock. Expensive in my viewpoint at this point of time, because they don't have enough amount of margin of safety to offer at current price. If at all, I think anything in the competition comes up, it could possibly have its own say on the stock price. That's what the concern would be.
Zomato's crossed that 300 rupee mark today for the first time ever and went on to hit a level of 304, 4.5% higher. And Swiggy too, seeing green on the screen for the fourth day in a row. But all eyes are going to be on the RBI monetary policy tomorrow. And after the lower than expected GDP print that we got, what is the street expecting? Ritu joins in with the key expectations.
The sharp slowdown in growth has put RBI in a very uncomfortable position. There is a growing chorus for a rate cut, including from government officials, at a time when high inflation, which has now breached RBI's tolerance threshold, continues to be a spot of bother. Now, the CNBC-TV18 poll shows that 7 in 10 economists do not expect the lower GDP print to accelerate the rate cut cycle, and they believe the primacy of inflation is going to prevail for now. The MPC is expected to leave the repo rate unchanged at 6.5% for the 11th consecutive policy because of lingering inflation concerns, and also because of the volatility in global markets, because a rate cut at this point can also accentuate the pressure on the currency. So instead of going for a rate cut, the governor could address the growth concerns with a dovish commentary, which will lay then the foundation for a rate cut in the next meeting. In fact, an overwhelming 90% of respondents expect to see the first rate cut from the RBI in the February meeting, and the total quantum of rate cuts is seen between 50 to 70 basis points. Now, while a rate cut is ruled out with inflation above 6%, there could be an explicit acknowledgement that growth needs support, and as a step towards an eventual easing, the RBI instead may go for a CRR or a cash reserve ratio cut. But the respondents are pretty divided on the possibility of this happening, with only 50% seeing the chance of a 25 to 50 basis point cut, which could ease some of the pressure on the banking system liquidity. Now, the GDP forecast, that is likely to grab all the eyeballs. 70% of our respondents are predicting that the RBI will lower its FY25 growth projection to 6.4 to 6.7%, and 20% foresee a revision all the way down to 6 to 6.3%. Now, on inflation, half the respondents expect the MPC will revise its projection for FY25 upwards to about 4.8 to 4.9%, while 40% are expecting a more modest increase. Now, apart from the policy rate decision, the RBI statement is also expected to focus on liquidity management, because systemic liquidity has been impacted because of increased forex interventions, and the government's cash balances have also been volatile. And so our respondents believe that the RBI will continue to manage liquidity through both main and fine-tuning operations. That's as far as the policy is concerned. Of course, markets also want to see what happens with RBI Governor Shaktikanta Das's tenure, which is supposed to end on the 10th of December.
Okay, absolutely. That also remains a huge question at this point in time, along with whatever will happen in the policy, right? Ritu, thank you so much for that. Well, let's get you some thoughts from CEA Anantha Nageswaran. He has stressed on more deregulation at the state and central levels, while urging for the corporate sector to step up investments.
The focus has to be on the plumbing of deregulation that has to happen in state and local governments. We touched upon it quite a bit in the economic survey in July, and that is going to be the big theme. Deregulation, or letting go, is the big theme for the coming economic survey as well. And this is an example. If Indian businesses have to comply with all the rules for building guidelines, small and medium enterprises may not even have 1% of land available for actual production. And of course, corporates have used the profits to reduce their leverage, which is a good thing. They are deleveraged, their balance sheets are healthy, but therefore now it is time to engage in a good combination of capital formation and employment growth as well. The staff cost of private listed companies, whether it is information technology firms or general, has been coming down. In other words, compensation growth has become weaker and weaker, compensation to employees. And if you take out managerial compensation, this will look even more acute, the decline. And of course, corporates have used the profits to reduce their leverage, which is a good thing. They are deleveraged, their balance sheets are healthy.
Okay, so yeah, that was the CEA. And he's also made a reference on the GDP numbers, and the whole possibility of whether we can have upward revisions and whether growth in the subsequent quarters will actually improve from the first initial shocker print that we saw in the second quarter. Anyway, that's on the economy front. Back to Deven. Deven, let's talk stocks. Now, it's anyone's guess whether we get a 25 basis points rate cut tomorrow. We spoke with one economist. He says 50 basis points CRR cut and a 25 basis points repo rate cut. So that'll be a shock, right? But in any case, from a short-term point of view, banks, NBFCs, what's the trade?
Yeah, so be all the best to all of us. I think if we get 50 basis point cut on CRR and 25 basis point
and 25 repo.
Well, looking at what RBI and the MPC wants to do probably in last few many quarters, I think they are overly concerned about managing the inflation using the monetary policy, which is not probably coming in their hand, and I don't think that it is working well with them. At the same time, on the other side, government has a compulsion. They are basically spending money. They want industry to contribute to that as well. Unless the rate of interest comes down, I think the enough amount of confidence will not come to corporate side. These are all some of the known facts. I am of the belief that I think the RBI will probably infuse liquidity. And given that kind of a situation, when the rate comes down eventually, I think there will be a revival in the spending. And that's where probably I think one is looking at higher amount of growth. Given that situation, maybe I think some of the stronger banks, and particularly I think the public sector banks, which have already participated in the rally, I think they could possibly be the winners in this game. Maybe the likes of SBI, likes of BOB, they may probably, I think, relatively remain stronger case for upside. Of course, I think the larger NBFCs, I think, will also have some better things to talk about, including the likes of Bajaj Finance and among them So we like this entire possibility going forward, and we believe that I think it's good to hold some of the good quality banking stocks in the portfolio.
Okay, all right. Devin, we'll leave it there. Thank you very much for joining us and running us through some of that. By the way, the markets cooled off and we were up cruising. And it was actually looking like it was picking up pace. From the highs, we've given up almost about 150 odd points. So that's a very sharp drop which has happened in the last, actually 237, the Nifty made a high of 24,860. And we're at about 680. So actually it's almost 200 points gone in the last 10 minutes or so. So it's actually as fast and furious on the way down as it was on the way up as well. But there is still almost 0.9% gains coming through on the Nifty right now. Maybe just a quick look at what is moving as well before we take that break. If you can just pull up the Nifty draggers and just see if there is any change here which is really coming through. I think what is up is still up, but I think it's just given up a little bit of gain. So Infi, ICICI Bank, Reliance and TCS, they've all come off a little bit from the day's highest point. There you go. They're all there in terms of gains. There's nothing significant or a one-off on the other side. There's very few stocks which are down in the red, and you can see them up on the screen. Devin, thank you again. Appreciate it. We'll take a quick commercial break here. We'll come back with Dinshaw Irani, who will be with us. He's with Helios Mutual Fund. That conversation on the other side. Stay tuned.
Well, I actually started interviewing with CNBC-TV18 way back almost 2006 or 7 or something like that. And when I look at some of those pictures and images, my eyes start watering because there is so much more hair and so much more black hair. So that's my first memory. Unfortunately, it is what it is. The main thing is the passion with which you and your colleagues, go about it every day. It's to find news every minute, every hour is not easy, right? And that to maintain that passion, that excitement, that authenticity is the one remarkable feature that I would like to mention to you.
Okay, welcome back. Market off highs very, very sharply. And my God, oh my God, look at this. Market has got 35 points.
Happened?
You know, I was referring to the 150-point sell-off from the highs. Oh dear, this is
350 now.
Catastrophic, right? I mean, it's just amazing. We were up 350 points and there's 30 points left on it now. That is how fast things have come off. That's how thin the ice is on which the market has been skating in that sense, right? It just completely disappeared, all of it. And I suspect a fair bit of this could be attributable to what's happening on the futures and options market as well. A lot of complaints, by the way, that premiums today, especially today, are too high. Premiums have been too high. Is that attributable because volumes are lower? Remember, last month, if you look at futures and options volumes, if you look at cash market volumes, they've been lower. I'm talking about the previous month. We'll have to do a check. What is the situation now? But generally, the complaint has been from many that premiums are too high. I'm not sure if this is coming through from, it's feeding through from that perspective. But this is a very, very sharp fall that we are seeing once again. As I said, the high was at 237. The high was 24,860. And we've given up, 350, nearly 350 points since then. So it doesn't get bigger than this. So both the ramp up 400 points from 12 o'clock to about 240 or so, and then of course, I mean the drop that we've seen, which is now 350 points, almost all of it given back in a very short time span. We'll get to individual stocks and what's happening as well. Dinshaw Irani is with us, CEO at Helios Mutual Fund. Dinshaw, good to have you with us here. Before you say it, the price is 50 points here and there. So let's just say it anyway. What's going on?
Hey, Prashant. Very good afternoon to you, your team, and the viewers. Actually, I came in on a very bullish note, but looking at the correction in the markets, I'm still bullish, by the way. So that doesn't change. Anyway, the fact is that we weren't expecting the market to rise so sharply today because we were also wondering what happened. Suddenly, why is the market moving up so sharply? And obviously, the downturn also has taken us by surprise. But the fact is, Prashant, I think the bulk of the problems are over in the sense that at least the FIIs which are moving out, and we've always been calling it out as a Trump trade. We never thought that it was China which was seeing the money diverted from India as such. It was mainly US, the money flying back to the US as such. I think that trade has reversed now. And obviously the worst coincided with the worst time for the fundamentals at least. So September, we believe that these are going to be the worst numbers. Going into December quarter, you'll see some uptick happening, maybe not that much healthy signs, but you may see some uptick happening. So overall, I think the things are not bad at all for the markets. And even globally, I mean, I don't think globally the markets are seeing some bad news on the sidelines or something, and that may impact the market. India needs to be driven by global markets also. I mean, you need the global factors also to be in place for India to keep on its way up. So we don't believe you'll see if I was to predict for you the FY25 thing, I don't think it's going to be a negative market for us.
All right. Hi, Dinshaw. Good afternoon. Good to see you win and congratulations. The AUM is just moving up, right? I think you'll hit a new record, I think, of 3,000 crores.
Yes. Thanks, Nigel. Yes, we crossed 3,000 crores quite appreciably. So next target is obviously not even 5. I mean, we're looking at much higher numbers than this. We're just warming up, I suppose.
Yeah, that's what Samir seems to, Samir was quite excited on Twitter, that 3,000 crore mark. And as you said, let's not look at 5. You're looking at 10,000. That's the next target. So good on you all and congratulations to you as well as the entire team. Make a lot of money for all your investors. Let's talk about various themes then, Dinshaw. What are you all most bullish on? The markets gave you a bit of a dip. I mean, we saw a 10% correction on the Nifty itself. Individual stocks went down 20-30% odd. What's the top theme?
So, Nigel, fortunately for us, our NAV, the last declared number, which was yesterday's, is at an all-time high. So, touch wood, I mean, the markets have been fairly kind to us. Obviously, our investment team has done their job. I mean, they're really on the ball on this one. The good ideas that we came up with along the way have been all the platform companies. I mean, we've been bullish on the 3 names earlier, and we've added one more with the new listing which came by in November. We were the anchor investors there on the day of the listing. We added a bit more, I mean, much more to our anchor holding also as such. So touch with that, that also has done fairly well for us. So I think this is one big mover which has helped us keeping our NAV back, I mean, bringing our NAV back as such. 4 of the platform companies that we are into. Obviously, IT is another call that we had taken. The markets were very skeptical about it, but I think IT also has done very well going forward. And obviously, the one big mover has been the banks, and especially the ones which you guys keep questioning Samir and me about all the time. That has done fairly well as such. So I think that all these things have come together to help us make this fantastic money, rather returns for our investor.
Oh, yes, absolutely. Banks have worked really well for you. Then, Sean, they've had a great run, right? Last couple of weeks, we've seen some solid gains come through. Now there's talk about more monetary easing, so perhaps better times ahead. By the way, I just want to draw attention to the market. I mean, this is moving like a yo-yo. At around 3 p.m., we had this massive dramatic fall come through on the Nifty. Today is the weekly options expiry. I mean, if you just see the rise and the fall, and then multiple times this has happened today, really require a strong stomach to digest it. Between the lowest point of the day and the highest point of the day, the swing is 550 points on the Nifty. It's that kind of a roller coaster that's playing out. Pull out a Reliance, perhaps. Reliance was one of the stocks that had that dramatic fall along with the Nifty when we went down. Now there's some recovery from that lowest level. We'll try and get some trading perspective with some F&O experts as well to just figure out what is going on in trading positions today. Today is the Nifty weekly product expiring on the option side. But anyway, Dinshaw, so what new? 2025? Give us a hot new idea.
By the way, Surabhi, coming back to that yo-yo in the market, there's my doctor who keeps telling me to go in for a stress test, and I always tell him that market stress me every day. So don't worry. I mean, my heart is pretty strong on this one. So anyway, so talking about 25, we actually don't think as I said, I already said it out in the beginning itself, don't think the markets will be negative. It'll be positive. Maybe they may not be as positive as one has seen in the past as such. I mean, the 14-15% kind of returns that one has seen, maybe it'll be single digits. Who knows about that? But the fact is that I think the biggest mover in the market will be 2 rather. One would be obviously the interest rates, how they pan out, how the central bank Indian central bank starts looking at that. The liquidity easing is already, hopefully something will come out tomorrow as such. If that happens, I'm sure interest rates will be the next one that the RBI will be looking at cutting off going into the next year. And obviously the biggest one of them all would be the policies of Trump, as and when he comes out with his thought process on what he is looking at in terms of trade tariffs and all that. I think that all will work out the future course for the markets as such. In terms of ideas, I think we'll stick with the ones that we have. We are very bullish on, as I said, private sector banks. The financial services space, that again continues to dominate in our portfolio. Platform companies will continue to dominate. Consumption will be a story which will pick up going forward. We are yet underweight on that one, but we'll be looking at that going forward. I'm sorry, I'm kitchen sinking out here because nobody knows anything about anything beyond a certain point in time. And I'm basically taking a call on what I see in the foreseeable future rather than anything else. So.
Dinshaw, hi. What about the hot themes of 2024? Defense, EMS, in fact, the last 2 years. What's the expectation of how they may perform next year?
So defense, actually, we are quite okay with defense. I mean, I don't think we believe that India at some point in time will become an outsourcing base for most of the defense players as such. You've seen that the private sector players, you've already seen that happening. Public sector also, there's some portion of exports which happens as such. But I think it's going to happen in a big way, given that the world is looking at friendly countries to source their defense from. And India, fortunately, has been holding its ground in terms of not leaning towards right or left or anything of that sort. And it's a fairly friendly country to source from as such. So that way, we are quite okay. However, we were really disappointed with the budget which was presented, and that's why we did trim a few defense names, but we got back into those names again as we realized that things are again on the way up. In terms of the EMS players, I mean, frankly, I mean, I think the China plus one story, I don't think that's going to pan out in a big way as such. China did what it did at the right time when the world was shrinking. They wanted to see cheaper outsourcing and stuff like that. But now the world is very apprehensive and they want their supply bases to be onshore or near shore and stuff like that. That's why you see US offering a lot of SOPs to semiconductor players, to PV players, to EV players, and to photovoltaic players and stuff like that. So I don't think that story is going to play out in a big way. There'll be selective pockets where you can play that with. And I think the biggest giveaway is the margins of our biggest outsourcing player. Fairly mediocre margins, or rather mid single digit kind of margins. That's not exciting enough for the valuation that player commands. So we would rather be comfortable looking at very selective players in that space as such.
Dinshaw, you made just taking a small detour. We have Chandan Taparia joining in. Stay with us. We want to hear what's happening in the F&O side. So let's get the intel as well. Chandan, of course, is derivative and technical analyst with Motilal Oswal. Chandan, good afternoon. Absolutely crazy, wild moves. Can you tell us what's the backdrop? What's happening?
Yeah, Prashant, really a roller coaster ride in the market. If I look at the days low to days high, the index witnessed a swing of 500 points, but in actual, the movement was much higher. There are a couple of reasons behind this. First, an important part is tomorrow we have RBI policy. And second part is that this is the first RBI policy after the US presidents. And apart from that, the 3 or 4 factors which I believe are important and reason behind these swings. If we remember that recently the SEBI came out with the guideline that there will be only particular days for weekly expiry. So earlier the volatility used to kill from different days of the weekly expiry, like Wednesday from Bank Nifty or Tuesday from Film Nifty. But now the entire shifting has happened to your Thursday due to the weekly expiry of Nifty only. Apart from that, what we noticed that most of the options writer or most of the algo trader were participating well in the Bank Nifty index to get the benefit of your theta decay. And ROI used to be better because every day they used to write the different strikes or different indices. But now as ROI is lower due to the higher transaction, due to the lower expiry days, so most of the traders have shifted their focus to weekly expiry on Nifty. So I believe all these are the reasons that why such kind of swings could be there. One important part also we need to keep in mind that now because of all these, the monthly expiry is likely to be more volatile because at NSE, all the 4 indices will expire on last Thursday of the month, including Nifty, Bank Nifty, Fin Nifty or Mid-Cap Nifty. So I believe that now the dynamic of the market has changed due to the recent change in the SEBI guidelines, and due to the change in the lot size also, I believe some more swings will be there. So these are the couple of reasons we need to keep in mind. And now expiry day will be more volatile and monthly will be volatile than the weekly. And this is going to happen. So traders need to keep that in mind. It would be very tough to buy option or sell option without putting proper support. But I believe because of this, a lot of new strategy like bull spread, bear spread kind of scenario may play in this market.
The idea when they introduced all these margining requirements, lessening number of weekly expiries per exchange, etc., was to reduce the amount of volatility, right? In a way, at least what we're seeing now is, it's the same, if not higher, right? At least today seems to be significantly higher. Is there also an element that since all these restrictions have come, the amount of swing that you need to generate the same amount of ROI, I'm talking about algos, etc., is that much higher? So is that also, there's no way to prove it, but do you think that also perhaps is at work?
Yeah, that is also a reason because earlier people used to use the same money to generate the ROI on every day. And let's say, for example, if you're making 0.1% every day, that it comes to 0.5%. And people can easily generate 2%. But now you only have 1 weekly expiry, that's on Thursday. So ROI is lower. So writers are charging more. And that is the important reason that why OTM strikes are now quoting at much higher premium. Now we are heading towards expiry. But if you notice at the beginning, even 400, 500 points OTM strikes were quoting at 30, 40 rupees. And usually it hardly happens on the weekly expiry. So because of the transaction cost, because of the pressure on getting ROI and due to your limited days on expiry are the reason that all such kind of things are happening. And I believe ROI pressure on all the algo traders is also reason. And one more important point we need to keep in mind that in last 1 month, all the algo traders have changed their stance because backtesting cannot be now applied. Most of the people used to do the option writing mainly for theta decay, and they were trading well with the bank nifty. But now bank nifty doesn't have the weekly expiry, so they need to apply with the nifty. But again, the scenario has totally changed. Apart from that, people used to do the trading setup in monthly expiry as well, but now the scenario will also change because of the volatile swings. So most of the algo traders have changed their stance. People were also expecting that there will be good activity in sensex, but now sensex expiry will shift on Tuesday, but backtesting data has only Friday. So I think
Chandan. Yeah, Chandan, that's exactly the final point that I want to check with you, this whole business on the sensex, because leave us with one final thought on the, the move, if at all, if BSE is gaining, because I think there's a note that one of your peer brokerages put out that apparently premium options turnover is increasing for the BSE. How much is the adoption? Because now other products from the NSE have been wiped out, the weekly products. So there's one Nifty weekly and there's one Sensex weekly. Is the BSE really gaining? Do you see a lot of traction of that product, that Tuesday Sensex expiry?
Yeah, absolutely. That is a win-win situation for BSE. In fact, if we notice that Friday Sensex was also gaining the momentum. However, they also focused on the BSX, but it was not comparatively doing well. But I believe most of the participants will focus on Sensex on Monday and Tuesday, being the expiry and T-1 day of expiry. They will focus on Nifty on Thursday and Wednesday. So definitely I believe the BSE, which might have 1/4 or 1/3 market share, may come to the 50% of the market share due to change in the expiry dynamics.
Absolutely. That explains the excitement around the BSE stock every now and then. Chandan, thank you so much for that. Let's just pull up BSE as well. We were showing the Sensex, which is fine. Let's pull up the BSE stock price, 10-11% higher, right? So it explains the kind of enthusiasm that the market also has. With, I mean, you just heard an F&O expert there saying that 50% of the business, the weekly business, 50% has been cornered by BSE. Monday, Tuesday are for the Sensex, and Wednesday and Thursday are for the Nifty. Nigel.
Well, that's right. Good view on that then. Well, I think it's that time of the day. It's 3 p.m. So let's get in Nimish to help us out with what he's picking up on D Street Chatter. Well, Nimish, what a wild day, right? I mean, the Nifty has moved 550 points intraday and the Nifty Bank has moved 1,000 points. I don't know what all the RBI governor has in store, but the bulls, they clearly believe a lot.
Well, Nigel, the volatility is largely because of the Nifty weekly expiry. That explains by the guests as well. But, in general, the trend seems to be that the momentum on the upside is backed by FI buying. I've been saying for the last couple of days that the flow seems to be have turned positive for India. And now the feedback is there is a bit of reallocation of global capital back into the Indian market. So again, that's positive at the margin from a large cap perspective. And even in the broader markets, the feedback is that there is basket buying even in today's market from a larger FI. So flow seems to be quite strong is the sense I'm picking up. The sector of the day is clearly IT index. The index is up to almost 2%. A couple of reasons. One, the Nasdaq was up almost 1.2% last night. And two, Salesforce reported Q3. That was quite strong and they've raised the guidance as well. The reading which I was looking at the CLSA report and they very clearly say that from an India perspective, Persistent, L&T Mindtree and Tech Mahindra, they are the three ones who benefits or there is a positive read-through for these companies in India. So maybe that explains a bit of rub-off in the IT names as well in today's market. As you rightly pointed out, the RBI policy tomorrow, it's a big event to watch. I guess there is a bit of preemptive move now that maybe there's going to be some liquidity ease by the governor. And that's why you've seen a bit of momentum in the Bank Nifty as well. So need to see as to how that comes out. But broadly, barring the volatility of today, there is a clear FI buying and looks like there is a bit of reallocation of global money back into India.
Well, that's right. Ramesh, just a quick point on the tech index. I was looking at the last month's flows. The FPIs were net sellers. But on tech, they were buyers. $600 million approximately. And that takes their total holding to 10%, which is still 100 basis points lower than what we've seen on long-term averages. So, that's why that was one of the sectors of the day we gave earlier this morning. What about individual stocks?
So in terms of individual names, the first stock is Persistent, part of the IT pack. Big move on that name. The volumes are on the higher side. I understand there is aggressive buying from larger FIs in Persistent. On top of it, there is a strong buzz or an indication that the company is going to bag a large order very soon. So that's something to track in Persistent. Interestingly, CLSA today has actually raised the target price in Persistent to almost 8,400. So that's the first name. The second stock is PN Guardgill, part of the earnings season, part of the wedding season. There is a bit of interest back in all those names, jewelry companies. PN Guardgill stands out because I understand a domestic PMS investor is an active buyer of late in that particular stock. The third name is RBL Bank. While the stock is in the FNO band, there is aggressive delivery-based buying happening for the last couple of days. Yesterday, the volumes were at record highs. Again, the feedback is one of the domestic mutual fund who owns a big chunk. They have further added into RBL Bank, and also there is a buzz that maybe we'll hear a corporate development in RBL Bank very soon. The last name is Tata Elxsi, again part of the IT names. A big mover in that name as well, purely on back of FI buying. So the delivery volumes are going to be quite high today on the buy side. But again, the buzz is that largely the momentum in Tata Elxsi is on back of FI buying today.
Nimish, have you heard of any action on the mutual fund side? I mean, I heard someone saying capital market fund maybe from one of the fund houses.
Sorry, I didn't get you. This is regarding
a capital market fund, a sectoral fund.
Okay.
A capital market stock fund. I mean, have you heard anything of that sort?
No, not really. No, Prashant. Sorry, I've not heard anything
all
of
right.
that.
Okay. All right. Nimish, thank you very much for that. We'll take a quick commercial break here. We're going to come back, buy today, sell tomorrow ideas with our technical experts on the other side. Stay tuned.
Welcome back. Now, once again, up close to about 300 points on the Nifty. Mitesh is back with us to make sense of the volatility and a few BTST calls. Mitesh?
I think I was hearing Chandan about Chandan saying about volatility on expiry day. I think the normal day volatility is also difficult to handle. Last few days have seen very strong intraday dips and then an immediate pullback. But the good thing is that the hourly and the 2-hourly charts, the indicators and the averages are positively poised, which means that declines will most likely be bought into. And while we've come off from the levels of 24,800, I think for the timing, my view is that it might take some effort to get past this 24,800 zone. So, take some profits off your long positions. Buy on a decline if you get closer to about 24,550, 570 zone is your buying area. And the range is shifted upwards now from 24,350, 500 to about 24,550 to about 24,800. So that's a positive sign. But maintain a long bias on stock side at least. And I have BTST on CESC, which I would recommend buying with a stop at 188.75 for targets of 185, 186 for tomorrow. And the other one is Bajaj Finance. That's a BTST with a stop at about 68.15 for targets of 69.20.
Okay, all right. Got that, Mitesh. Thank you very much for all the trading calls and ideas. You have a good rest of the afternoon. And we'll see you again with the market action tomorrow morning. Let's move on then. We're learning from sources that life insurers have likely taken price hikes in their term portfolios. And we've seen some of this play out. Remember the buzz in stocks in the earlier part of this week on the sort of indication that maybe one of the large insurers like HDFC Life is moving ahead with a hike in term premiums. Yash is here with more details. Yash, what are you picking up?
Well, Surabhi, you spoke about HDFC Life, and of course, HDFC Life was the one which started, looking at an increase as far as the pricing of the term book is concerned. What we've been given to understand from our sources is that HDFC Life is likely to have taken a price increase of about 5 to 7.5%. As far as the term book is concerned, under the Click to Protect portfolio, at an aggregate level with all the in the year, the price hike at the portfolio level is about sub 5% for HDFC Life. Following HDFC Life, a few other life insurance companies have also undertaken a price increase. Life insurance, all the price hikes from these companies are in their term insurance or a protection book as far as the portfolio level is concerned. Interestingly, SBI so far has not taken any price increase as far as the latest round of hikes are concerned, and my sources tell me that at this point of time there is no thought on doing anything of that sort as well.
Thank you very much for that. We'll slip into a very short break. By the way, Vodafone Idea is down 4.5%. And on Industars, it's up 1.8%. So no outsized gain on Industars, but it's still in the green now. We will slip into a very short break. We'll come back and talk more on the markets. Just 5 minutes left for close.
Welcome back. Well, we are down to the final moments of what has been a hugely volatile day. 550 points from the lows to the highs, with several huge swings in between. Look at that last gash, that big V in the last 30 minutes of trade. It's really everything happening. So let's start, recapping what the final tally is looking like. The Nifty is managing, after this whole swinging business, is managing a 230-point gain. The leaders include Trent. Trent is a very, very smart. Late rally on Trent, by the way. This move has happened in the last half an hour. And it's taken it to pole position on the Nifty. 3.5% up on Trent. Titan is also keeping it good company. TCS is also up and about. So the Tata Group is really shining bright this afternoon. Infosys, about 2.5% on the upside. Wipro was the other tech name, Tech Mahindra. So basically, most of IT has done really well. Dr. Reddy's, ICICI Bank, these are some of the other winners. Hindalco, M&M, and Lever. The Bank Nifty is up about 0.6%. It's underperformed the Nifty slightly today. But lots of big names. I mean, there's Kotak Mahindra Bank. Let's look at SBI. SBI is 0.5% up. And HDFC Bank is about 0.25% on the upside. So those are the winners on the Nifty.
BSE 14% higher, CDSL 8% higher, capital market plays in full action, Angel up 3.5%. Then you had gains in the form of Bajaj Housing Finance 6% up, Sagility. Tech platform names like Zomato, Swiggy continue to gain ground. Granules saw a recovery today, 4.5% higher. But on the way down, so largely there was more green than red, but the advanced decline ratio was just marginally in favor of the gaining side. On the way down, you had Graphite India, which sold off very sharply after yesterday's up move.
A few names which have been sort of, kind of dead for a while. Bajaj Housing Finance should come up on your screen. That had a sharp move higher today. And Credit Access, of course, that was up about 6% as well. These are, from the respective areas, Housing Finance and MFI, some of the higher, better quality names that we really saw coming in. Lots of other sort of movers as well. Actually, bulk of the movers is of course, capital market plays are different, but all kind of, industrials, manufacturing, those kind of names. Old economy maybe. IGL, Castrol, Maharashtra Seamless. There were gains in Skipper. Afcons was sharply higher. Phenolix Cables, PCBL. It was all old economy, manufacturing, industrials kind of names. IMFA. These are some of the big volume-led gains that we had through the course of the day. So, a pretty wild day with lots of moves. You total all of that up. I think you'd be easily in 4-digit kind of moves on the Nifty itself. And that's the day. But a good close nevertheless. We end at about 24,700 or so. The adjusted close, I think that is the adjusted close. So 24,708 or so on the index. Well, it's a wrap on this edition of Closing Bell from all of us here. Goodbye, but markets forward will pick up on all the action on the other side. Surabhi and Nigel take you through that. Stay with us.